Allow me to stand on the protocols that have already been observed. Before I get into my case, let me start with some rebuttals and why as side government, we do not believe necessarily that the consequences that side opposition is giving within today's debate will necessarily affect price stability or will necessarily affect the men on the ground. First of all, the side opposition posed us with a couple of questions, and they say that we have to focus on this economic indicators to check how much the economy is growing, right? But panel, they fail to tell us exactly how price instability also affects these economic indicators. They fail to tell us as to how, if Tanzania is not able to afford bread today or tomorrow because the prices have skyrocketed, how that will negatively affect the GDP or how that will positively affect the GDP. So with that being said, let me move into my case. Today, I'm going to talk about how ensuring price stability, taking the risk of an economic recession will allow businesses to have a stable environment for planning and investment, right? If prices are stable, if these businesses are able to forecast what the costs are going to be for the production of their goods, they are going to be able to make long-term investments. These long-term investments will lead to businesses growing eventually. Sure, we do consider the fact that in the short term, ensuring this price stability might necessarily not very greatly might necessarily not positively affect the businesses. However, in the long term, if these businesses are able to take out these long-term investments, and if they take out these investments with certainty that they will be able to make a profit on these investments, that these investments will help them grow in the future, this make sure that these businesses, yes, are able to grow in the future, they are able to create more employment and contribute more to the economy. Sure, in the short term, they might not grow as much as we want them to grow because obviously monetary policy, the monetary policy transmission mechanism might not allow for that. But however, if they know that these loans that they're taking, if these investments that they're taking are profitable in the future, and if they know that in the future these long-term investments are going to benefit them, of course we have to consider the fact that these businesses should rather think about the long-term investments and they should think about that. I'll take you.
You do realize that the Bank of Namibia has had various repo rate announcements and inflation targets, right? But then we did not reach most of those targets. How do you then speak about price stability and how does that then benefit the men on the ground? Thank you.
For these monetary policies and the repo rate, for the people to be able to feel this repo rate stuff that's happening, apologies for the language, it takes approximately 8 to 12 months for the effects of the repo rate to be felt in the economy, and for the men on the ground to necessarily be affected by this repo rate. Therefore, we believe that businesses should start thinking about long-term investments and how they're going to be able to grow this, right? Why do we believe that this risk is necessarily worth taking within today's debate? We believe that if these businesses take this long-term investments, knowing that they are eventually going to get a return and they're eventually going to grow their businesses, this will lead to less unemployment because their businesses will be bigger in the future. And this, if we do not control this price stability, and it is a lot of price instability, and there is uncertainty and risk in the businesses taking out these long-term investments, businesses are not going to make these long-term investments, they are not going to have certainty on them, and this will discourage business expansion and growth, meaning that even though the prices are big, so the businesses will see that the prices are volatile, therefore they will not want to take these long-term investments because they are not certain, right? Therefore, the businesses are not going to grow in the long term. We do consider the fact that yes, in the short term, there might be a little bit of problems that these businesses will have to go through due to these monetary policies. However, in the long term, if the businesses see that these prices are stable and that their investments are certain and they are going to be able to grow to expand in the future, they will be taking out these investments. How is this necessarily good for the economy? If businesses are growing, if these businesses are expanding, employing more people, spending more, this stimulates the economy. Sure, in the short term, this might not happen. However, in the long term, as long as these businesses are able to grow in the future, they will eventually be able to stimulate the economy and provide more jobs for people. Before I continue, I will take another drive.
You said businesses. You said businesses are spending more. That leads to hyperinflation, and that still leads to unstable price levels. Is it not so?
I didn't say that businesses will be spending more. I said that they will somehow be affected by these monetary policies. I didn't say that they will be spending more. They will be spending more right now. However, I didn't say that. However, yes, I didn't. However, they will be able to grow in the future. And if spending more today results to you being bigger and employing more people in the future, sure, why wouldn't you spend more right now, considering the benefits that you're going to get in the long term? And with that, I am proud to propose.